these stupid monkey pictures, derivatives that people bought, went up and crashed. They see all of the bad stories. What they're not seeing is the unbelievable amount of money, intelligence, focus, and passion that's coming. So I spend a lot of time speaking to some very fancy people, and those very fancy people are very interested in this space. Now, whether that's crypto OGs, because they've now made enough money where they want to own art.
Hi everyone, welcome to Smart Invest. Since it reached its low point in 2022, Bitcoin has returned enormous amounts of money, and according to Raoul Pal, the most prudent course of action was not to trade every swing, but rather to simply hold on. According to Pal, the chief executive officer of Real Vision, true wealth in the cryptocurrency market has not been achieved by chasing altcoins with a 100x return or by attempting to time every dip. Rather, it has been achieved by maintaining high-conviction assets such as Bitcoin over an extended period of time. Simply holding Bitcoin has consistently exceeded the performance of the majority of active strategies over the course of the past 3 years. Despite the fact that many new investors come in with the expectation of making quick gains and enormous profits, they frequently find themselves caught up in the volatility, begin trading aggressively, and ultimately find themselves caught off guard. It is possible that the current cycle will not follow the same script as the previous one, as Pal warns. In the event that Bitcoin only corrects by 40%, as opposed to the typical pullbacks of 60 to 70%, traders who are waiting for a deeper drop might miss the next surge entirely. Moreover, when liquidity returns in a hurry, the market may move quickly, leaving those who have been waiting on the sidelines completely behind. Be sure to stay around, because Pal will soon reveal the signals that he is keeping an eye on as the next phase of the cycle will begin.
Book is the liquidity layer for all of the SUI ecosystem. So basically, if you think about it, the more SUI gets used, the more DeepBook is used because that's the liquidity. And it's a smaller token and it outperforms. Now, will that continue in perpetuity? No, but at this stage, a SUI becomes more known and more people are using it and realizing how fast and cheap and efficient it is and what you can build on it. The more liquidity has to increase within it, and that's the liquidity layer. So it's kind of simple. Walrus is much harder because Walrus itself is this decentralized distributed data layer. It's groundbreaking technology. It's super interesting. It's multi-chain, all of this stuff, but it is its own beast. It is not actually related to SUI, apart from it does accrue to the SUI chain. You need to look at that with Metcalfe's law. How many people are using it? What is the value being done? That's very different. DeepBook is pretty simple. So I've talked about this a lot, and people still don't understand it. Right? They're like, NFTs got burnt in that last time because they're like the meme coins of the last cycle. NFTs themselves are just an amazing technology for non-fungible assets to be stored in perpetuity and traded. Okay, fine. But what's come out of this is the Lindy effect. I talked about Solana and how it survived last time and thrived. Within this, we had a bunch of digital art. Amazing artists with a incredibly vibrant community that's small but growing, that are passionate beyond belief about collecting this stuff and will pay millions of dollars for it. If that is not signal, nothing is. So there's signal. Let's do the macro backdrop. We're in a $3 trillion industry right now, crypto. If I extrapolate trend rates of growth, it goes to 100 trillion within 10 years. That would be 97 trillion of wealth created. So let's assume Raoul is a total moron, discount me by 50%. $47 trillion of wealth will get generated. That's more wealth than got generated from the opening of Russia, China, all of the hedge fund billionaires, and all of the Silicon Valley billionaires combined. So, and it accrues to different people. The average man, the Uber driver, the OGs, there's a whole bunch of people in this space who are the podcasters, you, the macro strategists, all of these people. So people are going to make money, and art is upstream of everything. And the reason being is like, I don't know if, do you know Tad Smith? So Tad is part of Dan Tapiero's 10T or 1RT. He used to be the CEO of Sotheby's. And his nice stat is the average billionaire's house has 10 times the value of his house in art. Why? Because when you're a billionaire, beyond about 5 houses, it's a fucking pain in the ass. So they buy art. Art is storage of wealth that is outside of the system, that is transferable-ish liquid, not really, but ish, and it socially signifies your status. And so what we've got here is we're about to create a lot of wealth, and people will flow to art. The other thing that's happening is as you create good times and bad times, you create culture. And the culture of the internet is often led by art, the culture of everything. Now, art could be music, art could be street art, graffiti art. If you go to look at the culture of the 70s, 60s, 70s, Warhol. Warhol represented culture. And in the 90s, it was and 2000s, it was Damien Hirst. It was Basquiat. It was Banksy. And here we've got Xcopy and Beeple. And then we've got this whole movement of generative art. So people are thinking of NFTs as these stupid monkey pictures, derivatives that people bought, went up and crashed. They see all of the bad stories. What they're not seeing is the unbelievable amount of money, intelligence, focus, and passion that's coming. So I spend a lot of time speaking to some very fancy people, and those very fancy people are very interested in this space. Now, whether that's crypto OGs, because then they've now made enough money where they want to own art, and they get it. You know, a punk. You know, you have a punk. I have a punk.
I bought the other one.
You bought it, and why? Because they'll probably outperform Bitcoin. They're about the same price. They socially signify in a way that your Bitcoin doesn't, because you don't show it to anybody, but you can show your punk off. It gives you access to a group of people that are like-minded. Like I'm going to a punks brunch here in a couple of days' time, and you get to meet a bunch of punks who I don't know. They're all anons until you meet them. And so you've kind of got this membership to this club. So, you know, punks is an obvious way to do that. But then beyond that, this whole art space is massive. And, you know, I'm speaking to everybody from institutions to super wealthy people through to just ordinary people. And they're starting to understand how important this thing is. And it's early.
The cryptocurrency market has seen Bitcoin's performance over the past 3 years to be the most consistent and reliable of all the cryptocurrencies. While Bitcoin was the only long-term play that stood out, Raoul Pal notes that there were only 2 other long-term plays that stood out: Solana during the cycle bottom and Sui in 2023. Other things came and went in the form of fleeting hype cycles, and they offered very little in the way of real value or long-term sustainability. Because there are thousands of tokens competing for limited attention, only a select few truly matter. These are the tokens that demonstrate genuine user growth and functionalities for the network. For the purpose of explaining why Bitcoin and Ethereum continue to dominate, Pal makes reference to Metcalfe's law, which assigns a value to networks based on the number of active users and usage. On the other hand, Ethereum serves as the foundation for a vast ecosystem of decentralized applications, while Bitcoin is now considered a sovereign-level asset and is held as digital gold. The ecosystem of Solana, which had been neglected for a long time, gradually rebuilt itself until attention naturally returned. Pal provides a straightforward and consistent response to those who are curious about how to build long-term wealth in cryptocurrency without engaging in gambling or falling for scams. The answer is to buy Bitcoin, take the dollar cost average, and be patient. Rather than chasing after every shiny new token, the most important thing is to learn how to navigate the volatility, to maintain focus on top-tier projects, and to have a solid understanding of the technology. As Raoul Pal continues to delve deeper into the topic of how to position yourself in this ever-changing market, shall we return to him?
So I think we're already seeing like the Xcopy floor price of everything has doubled, tripled. Punks have gone up a lot. from the low. They're not at the highs yet. Xcopy is getting very close to its highs already. It looks like he's the big artist of the space. Beeple prices have doubled and tripled, and some of them have gone up 5x. So, and there's a lot of lesser established artists. We had Sam Spratt sell $3 million recently for a piece of art. So there's some big stuff going on. And so we will see prices rise, but this is not a trade. This is an investment. So, I own a lot of this art now, and I just think of it as a 10-year plus time horizon. Like, I've got a house, so I don't need a house, but this art I can appreciate. I can enjoy the culture, being involved in the community, which is amazing. But in the end, I've got an asset that's going to be valuable because it's going to be scarce and there's going to be more money around chasing fewer goods. And these goods are highly sought after. And so I think of a longer term time horizon. If I go back to, I think, the conversation you and I have had, once you get to the economic singularity of when the AI and the robots are basically running the economy and we don't know what we need money for and stuff like that, a digital store of value like that is extremely valuable.
What's the logic?
The logic is, as we live in an increasingly digital world, we will value digital things in the same way we value physical things. Now, physical high-end art is 10 million, 50 million, 100 million, 200 million, 500 million. The most expensive piece ever sold was Beeple. Let's ignore that piece. It's probably an Xcopy and it's probably around 6-7 million. And there's a few punks that have traded maybe at 10. Okay, so we are nowhere near where traditional art. That is all owned by baby boomers and some Gen X. Most people of the younger generation won't buy that stuff.
For sure.
And they'll also never be able to afford it. Because when I speak to friends of mine who own a lot of that kind of art, they bought it early too. And really it's the new entrant rich who comes and buys it. Somebody sells their company for 10 billion bucks, they'll go and buy themselves a Warhol and a Matisse or whatever.
There is a possibility that ETH is forever cooked.
There is a probability, and we'll talk about ETH in a sec. If it is not cooked forever, and let's say it finishes this cycle up 5x or whatever from here, or 3x or whatever, 2x, doesn't matter. And you've managed to buy art in a low ETH price, you will make a multiple on that. And if people make money, they'll buy art, so the art starts outperforming ETH. So you've got this double kicker that's available, which is why there's been a lot of sales recently, because in dollar terms, it got cheap recently, as ETH fell in this correction that we've just had. So there's been a lot of dollar buyers, not ETH buyers, because not that many people hold a lot of ETH anymore because of the same reasons. We switch for other stuff. So let's talk about ETH. What is the probable outcome? ETH's cooked. All the developers were wrong. This massive ecosystem, they fucked it up with the layer 2s. Nothing accrues. What's the point? It's all broken. Solana's going to take everything. Okay, I hear that narrative. My narrative is they've overbuilt capacity for what the system needs right now. They will adjust some of the accrual mechanism back to the layer 1. But EVM is Microsoft. Every bank, every insurance company, every major company in the world uses Microsoft. Not Apple, not Google. Why is that? Because you don't get fired. And once it's in, and somebody explained this to me yesterday, it was a really interesting thing. It's like once you have enterprise sales model, it is almost impossible to extract it from a business, which is why banks are still using Cobalt. And it's because you don't want to change it because it's working and you've learned how to do it. And nobody wants to take the risk of saying, oh, the whole company, we're going to turn to X now. So if you think of Ethereum as gone through its Lindy effects, it clearly works very well for what the financial markets need. They can build layer 2s, as Coinbase has shown, that can work perfectly for what their needs. If they need high security, they can use the layer 1 chain. They've got all the ZK stuff and all the other stuff that's being built. So everything is there. They've just got too much capacity. But if the finance system comes, they'll go there. Yeah, sure. there'll be stable coins and Sol and Sui and all of this stuff, but, is Goldman going to build on Solana? Highly unlikely. Is JP Morgan? Highly unlikely. And will they build their own layer 2s? Highly likely.
Despite the fact that he is still extremely bullish on cryptocurrency, Raoul Pal is clear-eyed about the risks, and he believes that every investor ought to be as well. The cryptocurrency industry is rife with pitfalls. One day you are in possession of valuable coins, and the next day you are enticed into risky decentralized finance schemes that promise sky-high yields that disappear overnight. Hackers are able to impersonate influential people, and even a single mistake can result in the loss of everything you own. Pal stresses the significance of maintaining a paranoid attitude, recommending that you make use of multiple wallets, keep your private keys safe, and make security a non-negotiable priority. He adheres to a personal rule, which states that when your portfolio begins to make you feel a little bit too confident, that is the signal to consider taking some profits. There is no such thing as perfectly timing the top, and you might end up regretting selling early, but securing gains in something tangible, such as a house, provides a sense of peace that lasts for a long time. There is no risk of hacking exchanges or smart contracts. Only real-world security is provided. At this moment, PAL is still active in the market, and we anticipate that it will experience yet another significant boost as we move further into Phase 2 of the banana zone. He says that when the time comes, the smart move is not to chase the last pump. Rather, it is to protect your gains and walk away stronger. The data points to more upside, but he says that when the time comes, you should not do that.